please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Time for the BTST calls. We have Ashwani Gujral and Prakash Gaba with us for that. Ashwani, you go first. It's been a very interesting day on the index, of course. Are you carrying home any positions, and what would be the stock calls?
See, index, I don't think much has changed except that ICICI is coming off. But what's going up from the lows is IndusInd Bank, Kotak, the retail banks. Probably, I think even HDFC Bank has also recovered from the lows. So in terms of stock calls, I think Kotak and NIT Tech both should move towards the highs of the day in the last 20 minutes. So these are the two calls that people should take. Other than that, I think BHEL looks like a sell. That's a sell with a stop of 86, target of 74. Pidilite is a buy with a stop of 1090, target of 1140. And NIT Tech, as I said, that's a buy with a stop of 1050, target of 1085.
Okay, big move actually in Pidilite. Just pull out the intraday chart of that stock. That's the one stock where Ashwani is going, of course, long for tomorrow's trade, but been a good going for that one, up 25 rupees or thereabout.
Yeah, absolutely. Okay, let's get more trading calls then. Prakash, what's on your list? Are you looking to buy or sell?
Buy and sell both.
Okay.
Indian Oil is a BTST. Buy today, sell tomorrow. His target is 172, stop 165. Selling is United Spirits. Can slide down to levels closer to around 3,260. Stop about 3,400.
Okay, Prakash, thanks a lot for that. Of course, now let's move on. We have Tahir Basha, CIO Equities at Invesco Mutual Fund, joining us on the Alpha Managers segment. Tahir, hi, good afternoon. Story of this earnings season has been the reaction on Axis and today ICICI Bank. What's that telling you about the market?
So I think at some level, some of these corporate banks and their results were kind of important from this result season point of view, as well as going forward in terms of the moderation in the problem of the corporate banks and the eventual resolution of the NPA issue. And I think both these banks have therefore demonstrated, as we all know, we've all seen a fairly decent approach to the whole cleanup process, accelerated the cleanup process, and at the same time have maintained more or less their core banking franchise reasonably well. I think that's probably what we had kind of lined up as expectation in both these banks. We do own some of these, both these banks in some of our portfolios and funds. So to that extent, that was a core thesis that the core franchise is reasonably intact, and so they've been improving in terms of their loan mix and holding on to profitability reasonably well. Improving CASA, and at the same time trying to accelerate the whole NPA resolution problem. So I think from that perspective, the market should cheer these two, and probably let's see how the public sector banks behave in the same regard. But I think that's a net positive for this quarter's result season and the overall mood of the market.
Okay, Tahir, good afternoon. I'm going to talk to you about Jubilant FoodWorks. I don't know if you can talk about individual companies or stocks, but more to extrapolate this from the point of view of looking at how to value extremely richly valued consumption plays. Now, Jubilant has chosen to sell off almost 2% after what were phenomenal numbers. I don't know if you could find any fault with them or not. So what's the sense from here on, and what's the takeaway for consumption?
I think broadly consumption trends are improving in some cases like Jubilant Food, as you mentioned, and maybe a few others. There are certain base related issues which are far more trying to magnify numbers substantially. So 26% SSG or whatever, probably I don't know whether that is sustainable, but it at least is reflective of the fact that underlying undercurrents in terms of consumer behavior, it's being seen in things like other consumer discretionary products, automobiles. It is probably seen in some of the other FMCG related pure FMCG plays as well, where we've seen volume growths trend reasonably well in this quarter. Anywhere between 8 and 10% are most of the where most of the numbers have been on volume growth. So I think it's reflective of improving sentiments and improving consumption patterns and stabilizing consumption patterns post hit on account of GST related issues and demonetization early last year. So I think that's what it at least seems to be telling us up until now, what we've seen of some of these consumer discretionary plays.
Okay, two more stocks which have made a lot of money for you. MRF, of course, has been an evergreen stock, and Exide as well. But again, Tahir, on some of these stocks now at multi-year highs, you think the risk reward is still favorable? Auto ancillaries?
Oh yeah, I would think so, and especially some of the names that you mentioned. I think quite a number of these still our assessment is that they are reasonably inexpensive. They are not at blowout valuations, even though they've been steady performers over the last some time. But I think they've been ticking along fairly well in terms of their earnings delivery too. And the overall macro environment is kind of reasonably stable for them from the point of view of general automobile demand. Commodity prices for some of these names also remain quite benign to positive for them, and they are at valuations which are probably in line or maybe somewhat cheaper than the market as well. So we from a pure valuation standpoint and the growth which could be in the vicinity of around anywhere between 18 and 20% for these companies, I think they are not very expensive in our view, and they are reasonably attractive at this stage as well, despite some recent performance out of these names.
Okay. I was taking a look at the Contra fund, which is one of the biggest funds at Invesco, Tahir. And there, obviously, financials and banks form the lion's share of your portfolio. Now, we've discussed some of the banks already. You hold companies like, Cholamandalam, Shriram Transport Finance. NBFCs, what do you like the most at the moment? Because at least most of the companies that have reported have actually come out with pretty decent growth numbers, right?
Yes, NBFCs, we've seen, you're right, that we've seen fairly decent numbers out of many of these names, and some of these we've owned for a fairly long period of time. In fact, we've seen them through a lot of distress as well, about 6 months ago and 9 months ago. Some of these names were in a transition phase for one reason or the other. Either they had cyclical headwinds in their sector, or they were facing NPA related issues, or they were trying to change their NPA recognition norms. All that was kind of impairing their bottom lines and operating earnings over the course of the last 3-4 quarters. So in a way, for us, these have kind of been more of recovery plays. But now they are kind of turning into growth at reasonable price stories after what we have seen of their performance in the last 1 or 2 quarters. So I think from the thesis that we follow in the Contra fund, these have kind of panned out reasonably well, that we buy them at times when they are in distress, or they have issues around them and they are cheap, and then hold on till the time they are growth at reasonable price, and as and when they become growth at unreasonable price, then look at exiting those.
Okay. After a long time, Tahir, we have seen a trend where the decline in Maruti has not been strongly bought. It's off the lowest point, but still about 12-13% of its highs. Your thoughts on auto space as a whole, and the Maruti story, you believe it's still perfectly placed?
Yeah, I think, broadly growth trends in, like as I said, in the auto sector are fairly firm, and we have seen some of the, not just the quarterly numbers, but even the April sales trends. So they are looking reasonably good. They are probably, company-specific variations have been the case in the auto space even in the last couple of years, and probably will come about even in the future. Broadly, the trends are strong. There will be differentials in terms of the growth rates on account of different effects, maybe either on account of base or probably product mix or new launch calendar and so on. So from that perspective, there will be some who have seen a very strong tailwind on account of new product launches in the last 1 or 2 years. They might probably slow down at the margin in terms of growth. So what was maybe growing at 25% might grow at 15, but it's not still a bad growth eventually. So I think, whereas there are some others which are actually been trending negative and starting to firm up. So for example, I was quite surprised to see that two-wheelers as an industry actually grew a fairly healthy 14% in fiscal 18, when there was not much of expectation out of that industry, whereas passenger cars actually grew only 4.5%. I mean, Maruti did very well, of course, but as an industry, it didn't grow as strongly. So that just maybe at some level throws up some interesting investment opportunities.
Okay. Tahir, you also have holdings in a couple of big FMCG, big oil and gas names. Reliance is one of them. I think Petronet is a stock that features across several of the funds as well. So what is the call here? I mean, is it just gas you're looking to play?
No, I think it's absolutely bottom up. I mean, Petronet is a different story. It's obviously LNG is what the play is, and it's pretty straightforward from that perspective. Reliance is a combination of both the core business as well as what we see in terms of its ability to establish a reasonably decent footprint on the telecom business. So I think we don't really have a very large holding or significantly dispersed holding in oil and gas. We have a couple of names which we own in our portfolios, and they constitute, and since we only buy overweight positions, they add up to being a fairly decent number. But both these names that you mentioned are on their own individual merits, nothing which is kind of common to both these names. One is a volume story, the other is more about valuation stroke improving dynamics in one business, supported strongly by a very well-trending core business. So that is how the stock selection on both these names has been.
Okay, on metals, Tahir, how should investors approach now? We had a clean one-year run where stocks ran up 3x, 4x. From these levels, you reckon we are still in upcycle?
So among the frontline, pure commodity plays, be it base metals or ferrous, we don't really have any exposure right now. We have a couple of mid-cap stroke small cap commodity or commodity plus kind of companies is what I would call them, and they are predicated not as much on price movements or strength of the commodity price cycle. They are once again predicated on their own merits in terms of new products introduced, or change in product mix, or a substantial capacity expansion which will drive volume growth in the next 2 years. So some of the names that we own are basically from that perspective. So we are kind of right now not taking any playing any price call or a strong commodity cycle kind of play in our portfolios.
And finally,
on the metal side at least.
Finally, Tahir, I was just looking at the screen and I saw Radico Khaitan. That brings me to my last question to you. You hold both United Breweries as well as United Spirits across different portfolios. I think the mid and small cap and the mid cap fund. Again, these stocks have had a phenomenal run last couple of months. Is there more to go? I mean, are you expecting better earnings as well as we go forward in the year?
Yeah, I think both these spaces are, from a volume trajectory, we all know that these are still reasonably long duration, volume growth plays. Once again, these are companies which we bought them at times when, there have been issues around them and they've been under distress and so on. So I think, as we stand today, we clearly are expecting earnings growth to improve over a period of time. Their profitability in both these businesses and both these companies are stabilized, and we are not expecting any great upside from margins, etc., from here on, but we would want to see the current profitability structure and margin structure stabilize. That's what we are looking for out of results. I think quarterly aberrations in terms of volume growth, these are also companies which have actually had a fairly decent amount of headwinds on account of regulatory issues. Those have sort of, if not entirely, abated to some degree, and that's also contributed to some part of their to their valuation expansion and performance of the stock prices. And I think they still remain like those stories where regulatory still is a headwind and gradually can convert into a tailwind.
Final question from my end on the oil marketing companies, where in the past you have had positive view. In the election year, you think that could be a bit of a negative story, or after the correction, is that a buy now?
You know, they've kind of now become plays which are more of, they'll operate in a very narrow band. You buy them when they are probably around book, or maybe sometimes maybe, you know, even book if at all. You know, these are going to be kind of companies which will be more like utilities. I don't think there is now a re-rating play which is available here, and especially given the current headwinds both on oil as well as on politics, on government. So to that extent, you know, we have to only play them for the fact that they are kind of 13 to 15% return on capital companies. Plus, some of these, or in fact, rather all of these, are actually going to embark on a reasonably strong capex program over the next 2-3 years, which was not the case in the last 2-3 years. And that will have its own dynamics at play in terms of its impact on return on capital, as well as in terms of profitability, in terms of growth, earnings growth. So I think these are more like now utility plays. You buy them when they are really cheap, and probably if they are closer to 2x price to book or so, you kind of exit.
Of the day, definitely worth watching to see if there's any follow-on buying tomorrow or not. So that's round figure 1200 on Interglobe back again. Then what else was moving higher? Mid-cap tech found buyers in the afternoon. So your first source, Hexaware, NIIT Tech, these stocks have gained between 3.5%, depending on which one you're looking at. Some interesting buying traction on the likes of an Indian bank, South Indian Bank, and from the NBFC space, it's probably GRU Finance. That was the stock of the afternoon, with a 7% up move coming in on GRU. So very, very solid out there. Then others like PTC, VIP, Godrej Properties, Concord. So interesting names, and we are talking about gains between 3-5%, not PFC, but PTC, Power Trading Corporation, had a pretty decent session for itself, about 3.5-4% up on PTC India. If I talk about the earnings reactions, and here's where it gets really interesting, because Jubilant FoodWorks, after all the song and dances, actually ended 2% on the lower side. Kajaria is absolutely flat, thanks to the fact that the management commentary at least was solid, and the volume growth number was better than the actual P&L numbers. Then we've got Godrej, which managed to cool off. The management sounded very optimistic about the next couple of quarters. Stocks managed just about 1% of an up move for itself. If we talk about the positive result reaction flowing through, then Inox Leisure, second continuous day of buying on what was a very, very good quarter for this company, 6% up out there. Disappointments today, Tata Coffee is down 7%, Tata Global has lost 1.5% as well. Then Trident, Tube Investments, these were some of the negative result reactions that were playing out. Some more stocks that are worth mentioning, perhaps BEML, maybe it's just a Karnataka sentiment play, but anyway, the stock was 4.5% on the upside today. Specialty restaurants found some buying. KRBL was on the upswing as well. PC Jewelers has ended 15% down, so it's one of those big knockdown days for PC. And PNB Housing Finance, 8% lower on that stock as well. So very, very mixed trends in the mid-cap market.
Yeah, mixed trend as well, of course. So let's take final thoughts then. Prakash, what's the trade for tomorrow then?
I feel that look at Nifty, one must look at Bank Nifty first. Bank Nifty has opened the gap and maintained the gap. So far it's up. So I think there's a sign of strength. Looks like Nifty can climb up to around 10,780 zones. That is the case as long as Bank holds.
Ashwani, I do want to get your take on Indigo, this knife that had been falling. You think someone's finally caught it? 1200 close today?
Well, common sense has prevailed. If you go to the airport, other than Indigo and Jet Airways, how many other airlines are there? So, you know, with this sort of a crash, that is where, you know, you can buy without a stop. And at some point, you know, crude will come off. It's a demographic trend. I mean, people will not stop flying. So that sort of common sense investing, that is the time in Indigo. And I had tweeted about this yesterday. Even in Jet, you know, it's not falling further. So at some point, you know, these things tend to become buys, and these are contrarian, but they have their own safety.
Okay, Ashwani, thanks a lot. We'll talk to you tomorrow. Prakash, thanks to you as well. Anand, before we thank you, just wanted your thoughts on a couple of these, sectoral moves that we have seen of late. Let's start with mid-cap IT.
Well, you know, mid-cap IT, I think, has pretty much done what it has to do, because I think the earnings pop that we saw has more than been compensated by the kind of market rally that we have seen. If you're actually looking at, services kind of industries with a consumer focus, I would think look at a small sector like education. Both companies, Navneet as well as Eschan, have fallen off a cliff, and this is likely to be the best quarter for them. So instead of chasing whatever the momentum is, I would really look at slightly out of the line sectors, which are not the focus of attention right now.
Let's get you the big story of the day then. We're learning from sources that Walmart and Flipkart are all set to sign a definitive agreement for Walmart to acquire a majority stake in Flipkart. We understand that the deal is likely to be made official in the next 24 to 48 hours. Shireen is joining in with all the big details in this one. Shireen.
Well, it is a bittersweet moment for India's startup universe, guys. As CNBC Tv18 learns, Walmart and Flipkart are all set to sign a definitive agreement giving the US retail giant majority control of India's homegrown e-commerce unicorn. Now, Walmart's impending purchase of a controlling stake in Flipkart will include about $2 billion of new equity funding, as well as it will see the entry of internet giant Google as a key shareholder in what will be the American retail giant's biggest acquisition to date in the e-commerce space. Let me take you through the deal structure now. What we are given to understand is that Walmart will buy up to 75% in Flipkart. This could be about a $15 billion deal, so it's a mammoth deal valuing the Indian e-commerce company at about $20 billion. This is, of course, source-based information. Now, the acquisition, which could be announced as early as Wednesday or Thursday, will be funded by Walmart with the existing cash reserves that it's sitting on and new debt. Walmart, as I pointed out, is expected to hold a majority stake, but the American retailer and Singapore-based Flipkart are in talks with other potential investors to also raise funds. That could see Google come on board as a new shareholder in Flipkart, and also the exit of SoftBank, as has been reported earlier by CNBC TV18. Other investors could also participate in raising funds, but that is post the acquisition closure. Also, Flipkart's financials will now be reported as part of Walmart International once the deal is done. Now, Flipkart is looking to leverage Walmart's retail expertise and, of course, its knowledge of the grocery and merchandise supply chain management. The investment by Walmart will help Flipkart build retail infrastructure, especially in rural India, and also help them set up an agriculture supply chain. That is what we're given to understand. Flipkart and Walmart will operate as distinct brands, so while there will be a lot of back-end synergy on the front end, they will continue to exist and operate distinct brands. Remember, Flipkart runs fashion portal Myntra and Jabong, a payments unit called PhonePe, and a logistics company called eCart. Walmart runs cash and carry stores. Best Buy is how they're called. Walmart, however, sees potential headwinds on its per share earnings post the closure of this deal, but in the long term, it sees this opportunity as being one that is EPS accretive. Now, the company is also expected to take Flipkart public and make it a majority-owned subsidiary in a few years. An Indian listing could be a possibility that could be explored. Now, a throwback. As we've been reporting, Flipkart, is a homegrown e-commerce story. It was founded in 2007 by Sachin Bansal and Binny Bansal, both former Amazon employees, ironically. The founders were not related, as well as early investors like Tencent and Tiger Global will continue to be represented on the Flipkart board. Walmart, Tencent, Tiger Global, and Google are also expected to continue to provide leadership to the Flipkart team going forward. Binny Bansal expected to stay on, Sachin Bansal expected to exit. This is going to shake up the Indian retail space, and of course, it is now going to be a fight between Jeff Bezos' Amazon and Walmart along with Flipkart. For now, it's back to you guys.
All right. Thank you, Shireen, so much for that. Well, let's take one element of this deal forward. It's a very critical element. Sources are telling us that SoftBank's board has approved this stake sale to Walmart, the stake that they have in Flipkart. We have Kritika joining in with more details. Kritika, you've been telling us that finally, Mr. Son is on board with this deal. Now, what's the latest?
Oh, yeah, there have been so many to and fro's in this deal. But yes, as we reported yesterday, SoftBank will be selling its entire 20% stake in Flipkart to Walmart. But the point here is that the board has finally given its nod. So there's no two ways now. They have cleared the complete exit of SoftBank from Flipkart. And in fact, in the board meeting, there were several areas with respect to the pricing, with respect to what happens to its India plans, where that capital gets deployed, that will come out in the next few days. But yes, it's not just SoftBank. We understand from our sources that even Accel Partners, Tencent and Tiger Global's boards have approved this deal between the last 24 to 48 hours. We understand that Tencent and Tiger will only partially exit. Ashwani was pointing out that they will remain in terms of their representation on board, and partial stake is likely to remain, but Accel Partners is likely to completely exit. So the boards have formally approved this. So now that the investors who are actually going to be selling this stake have given their nod, this paves the way for the board of Flipkart to now meet and board of Walmart to now meet and then sign that binding term sheet like Shireen was pointing out. So this week is pretty much going to be by the looks of it at least, there should be an announcement soon.
Okay, so it's probably the deal week in this big retail story that we are talking about. Thank you, Kritika, for that. Well, okay, Dalmia Bharat is likely to move the Supreme Court in the Binani case. Doesn't come as a surprise. This was sort of always anticipated. This is a tussle that's been going on for Binani Cement with Ultratech swooping in. Let's actually see if we have Ritu joining in with the details. Ritu, I guess playing on expected lines?
Absolutely, Surbhi. I mean, not a surprise at all. You know, after Dalmia Bharat moved the NCLAT against the 2nd May order from the NCLT, which directed the Committee of Creditors to consider a revised bid by Ultratech for Binani Cement, Dalmia Bharat moved the court to ensure that, that bid is not considered by the lenders. And after the NCLAT, which is the higher court, refused to grant stay, now we understand that Dalmia Bharat, through their subsidiary, of course, which is bidding for the company Rajputana Private Properties Limited, will move the Supreme Court to ensure that they get a stay on the NCLT order, one. And second, they also prevent the Committee of Creditors from meeting on the 10th of May. The COC is scheduled to consider that revised bid. Very clearly on the agenda for the COC meeting that day is to consider both of the bids and the revised bid from Ultratech, which we understand from sources is close to 8,000 crore rupees, exactly about 79-60 crore rupees. So that will be considered by the lenders, and Dalmia wants to ensure that that meeting itself does not happen. So it will be moving the Supreme Court very, very soon, in both of these matters.
All right, Ritu, thanks very much for that. So the tug of war continues, and it seems it's landing up back in the Supreme Court now on that one particular insolvency case.
Let's chat commodities, and it clearly has been the crude oil prices which have been very, very volatile, given up some of those gains that we saw yesterday in the New York session. It is all about the US president making a statement at around 11:30 p.m. our time on whether or not he chooses to stay with the Iran deal, and that clearly has been making the markets jittery. So that is what the markets are awaiting, the Trump's decision on Iran. And ahead of that, we have seen nearly 0.8 to 1% of decline come in for the crude oil prices. We will, of course, discuss all of that in detail, but it is exactly crude oil that MCX also is looking to launch in sense of options from this month itself. Joining us to talk more about that is Mrugank Paranjpe, MD and CEO of MCX, joining us on the show. Mrugank, hi. First of all, congratulations, of course, because SEBI has approved 4 more products for options to be launched by MCX. How soon do you see all of these contracts coming online now?
We were expecting to receive maybe in batches, but we got all the 4 approvals. As of now, the plan is that we will be launching the options in crude on the 15th of this month, and thereafter we will follow it up with copper, silver, zinc in that order very shortly. So I think probably we would have finished all the 4 product launches within the month of May, but crude is definitely going to go live on the 15th of May.
Mrugank, while of course this is good news, but the liquidity really seems to be an issue, and gold has faced that. You also have introduced the liquidity enhancement scheme. How well has that been received? How better has it made the market for you?
It's been about 8 days of trading in the liquidity enhancement scheme. Extremely pleasing results. I think from our perspective, we were looking to doing a couple of things with this. One, we wanted to make sure that the bid-ask spread is extremely tight so that it offers people the avenue to actually enter or exit depending on their view of the market. That is something which we think has already been achieved. Thereafter, we wanted to make sure that this enhances the reach of the retail, and that's something which we already see happening. And therefore, last but not the least, which is the third objective, is to make it a very liquid and viable contract in the long run. We believe that process will take us anywhere between the next 2 to 3 months, and that's what we will now be working towards with all the market participants in achieving through the liquidity enhancement scheme.
Mrugang, we look forward to that. But what also is your view on the extension in trading hours for equity markets as well? They, of course, have time and the process would go on until 1st of October before this happens. But commodity markets, do they also stand to gain from this? Because you will have now more players staying awake till midnight to participate.
Regulators have been looking at expanding this market. Regulators are also creating an ecosystem which is across all asset classes and will allow the ability for investors to move between asset classes, both in terms of their capital as well as in terms of the technology that you need for that. We believe this is a great step. We think it will benefit the commodity markets because there are a lot of players who do participate on both equity and commodity markets, and we will see larger participation coming through as equity brokers as well keep their shop open till very late.
Well, absolutely. Mrugang, also when we do see a couple of more exchanges coming in on launching a commodity segment, do you see more products being then introduced or more commodities coming via these exchanges, or is it going to be the same products, same instruments, but more participation?
I wouldn't be able to comment on what the other exchanges would do, but I think if you look at the regulatory sort of push, and if you look at what regulators have always said, they are looking to expanding this market. So I think, we have 91 commodities which the government of India has notified. There are hardly about 1/3 of them which trade on the 2 or 3 exchanges put together, and there are many of them which are not yet liquid as well. So I think the capacity of the market to grow with newer products is enormous, and therefore I would see that with the advent of more exchanges, there will be many more products coming in, and not just sort of a Me Too product which mimics what is already successful in some of the other exchanges.
Well, absolutely, Mrugang. Thank you so much for joining us. There is much more happening into the asset classes, and commodities clearly stand to gain from that. And more options, as Mrugang is telling us, are coming our way in this month itself. And Prathamesh Male of Angel Commodities now joins us to talk about strategies in case of that space. Prathamesh, hi. And crude oil prices is something that is top on everybody's mind. I mean, of course, it's anybody's guess on what really could be happening today. But ahead of that meeting or announcement, how are you looking at positioning crude?
Hello Manisha. Yes, I think in the previous conversation that we had, I was really skeptical about the move. I mean, WTI crossing 70 mark and briefly touched that mark and then corrected towards 69 in anticipation that what might be the outcome of this deal, Iran Accord. I think it is really uncertain what the outcome would be, but then the correction seems to be there, and possibly it is headed towards $67 as far as WTI is concerned. So immediate near-term possibility, we see oil prices possibly falling at least $3 from here on. So we would not advise our investors to be on the long side as far as oil prices go. I think this is investors might possibly get caught on the wrong side of the market because it has continuously been trending higher since last 10 trading sessions. So you should not be on the long side. So stay away from longs. Yes, you might possibly build a short strategy and you would possibly gain on it.
You said $67 is what we could see today. Would you say this is really about buy the rumor and sell the fact kind of a strategy that we could be looking at today?
Yes. I mean, exactly. You put your thoughts, my thoughts in action. Yes, I would possibly do that, and I would be on the short side as far as oil goes. I think on the MCX rupee terms, I think 4,600 immediately is what we're looking at, and if 67 cracks, I think 64 looks there in the cards. But yes, only time would say what the outcome of deal would be.
You know, another thing, Prathamesh, that the markets perhaps seem to be looking at is that if the Iran sanctions, if US actually walks out of Iran sanctions and we do see a decline in Iran exports, would you say that that in some sense also means that OPEC exit strategy could start rolling in because of that? Because with Iran production coming down, would OPEC still need to continue its output cuts?
I think OPEC's compliance has been there even when Iran was not considered as a part of the strategy. So irrespective of whether Iran gets out, it really would not hurt the compliance of what OPEC does. I think it has agreed for its extension of capping the oil output. I think which they would adhere to, and Iran would really not make much of difference for OPEC compliance.
Point taken. What also is your sense now coming in for the metal space? Because it's really a fourth straight day where we have seen support come in for copper. Zinc prices have continued to gain for a second straight day as well. How are you treating the metal space?
In the metal space, I'm a little bit cautious as such, because if you see nickel prices, there's a lot of volatility. If you see zinc, again, volatility seems to be there on the cards. I think it would be a range play as far as copper goes. 450 on the lower side, 460 on the higher side. On the M6 is what it's trading at. If I were to be asked to choose one metal to trade, I would possibly trade zinc for that matter. I think the correction is there on the cards for zinc towards 200. For rest of the metal, I think nickel I would possibly avoid, because you could get stuck in any on the long side as well as short side, take into consideration the volatility. So I would pick this one metal.
All right, Prathamesh, we'll let you go at that. Thank you so much for giving out all your strategies. So quite an important day, and ahead of that, not going long in case of crude is what I take away from that conversation.